Hey there, vacation dreamers. Are you tired of the same old ways of saving and spending money to fund your family vacations? What if I told you there's a better way, a way that you can fund your summer getaways, your ski breaks to your favorite destinations while keeping all of your money growing, guaranteed, and adding an extra layer of protection and financial security? Let me introduce you to the magic of the infinite banking concept for vacations. Break free from the traditional vacation funding. Unlock the stress-free secret to family getaways. Tired of sacrificing your hard-earned money, saving up and draining that bank account for your dream vacation, or putting it on a credit card and paying more than you need to, which is what so many of us are doing right now. We go on vacation as parents and it is stressful. So I'm going to introduce something that my family has used to take the stress out of vacations, to make sure that our money is growing for our future selves, it's protected from judgment and liens, and we're able to use that money stress-free while teaching our families a better way to secure their future. So this is how the wealthiest families are doing this. Stay tuned while I dive into this and show you. If you stick around, I'll show you exactly how I use this to fund our family ski vacation. Who here wants to vacation like a boss? Can I get some eyes? Who here needs some time off? You've been working hard, you've been hustling. And by the way, I do not prescribe. I heard something yesterday in one of my masterminds, and it made me kind of sad. It's someone I respect a ton. I won't name his name, but he said, I live 3 days every day, 6 a.m. to noon, noon to 6, 6 to midnight. And I was like, dude, when do you sleep? That's only 6 hours. The hustle culture is not what we need. We don't need more hustle. We need more thinking, more long-term thinking, better thinking, more fun, more life, more energy, right? Here's the problem with traditional bank-funded vacations. There's 2 ways you do it. There's 2 ways that I know of. You either save your money up for cash, like the last gentleman, an attorney I was just speaking to in Vegas. You save your money up cash, and then you pay for everything in cash. That way, you're only giving up the opportunity cost, but you're not paying extra interest. The second way is you may save in your savings, but then you do it on a card for the rewards. You do it for the airline miles, for the cash back, for the perks, the benefits, right? That's what the banks need us to do. They want us to deposit our money in the bank, then to leave it there, and then when we need it to open a credit card, and we think because it's 0%, we're just going to pay it off. So we drain that significant savings back to what? Someone give me the number when you take all the money out of your bank. How much do you have left? Right? Nil, zip, zippo, zero. There we go. Linus has got it. We got zero. We drain the savings. How many of you parents, how many of you here are parents? Can I get some eyes in the chat if we got a bunch of parents? I'm a father of 2 boys. I got a 10 and 21-year-old. I give you the 2 ways you're going to pay for your vacations traditionally. You're either going to save your money, you're going to work, you're going to scrimp, you're going to save, you're going to do, you're going to live a fairly disciplined life. You got 2 from Rebecca, 3 from Linus. Ooh, 1 on the way. I know that, Linus. That's awesome. So we're going to save all year. Then we go on the vacation. And this was me for 46 years. I would take the family on vacation. I'm grateful to be there. And how many of you does it take 2, 3 days? You have a 7-day vacation, 10-day vacation. It takes me 2 to 3 days before I relax. I'm an ogre when I get there. Like horrible. Like ask my wife, horrible. I do not want, I have so much stress because it took so much energy to get there. We're there and we're having fun. Everyone else is having fun. And I am worried about what's happening. I am worried about what we're spending money on, how much is a food costing, all of the other things, because I know if it's going on a credit card that we're going to overspend because we're all having fun. We're all going to get whatever we want, right? And we're all going to do what we want. And if we want to do an extra day of skiing or we want to do an extra day of something else, then we're going to do it because we've waited that whole year. We have worked hard. We have sacrificed to be there with our loved ones, to give them that experience, to have fun in that moment. And when that happens, it's an amazing experience for our loved ones, but how does it feel for us? How many can recognize, can I get some hands up if you have stress, if you feel stress when you're on vacation, if you worry, if you feel like, oh my God, I'm going to need a vacation from my vacation, and then I'm going to need a second job, a side hustle to keep making money, to keep doing this, right? So I'm going to introduce a different way. I'm going to introduce a way where we can use the infinite banking concept, where we can take back control of our money by changing just one thing. Where does our surplus money go first? Just that one thing. So when we do this, we first have to pay ourselves first. That's the first concept. Dennis says me, Linda says me. That's the feeling. I know it because I've been there my whole life and I've asked other fathers and friends, people in my community. Like when we're on vacation, you know, or we're shopping with the wives and we're all sitting there in the nice new chairs they have for us sitting around and our wives are looking beautiful. They're trying on stuff for the vacation, new dresses, purses to match, all the things. And we're all like, oh my God, how are we going to do this? Right? So what if there's a way when we use infinite banking, remember, we can use it to make money on all the cars we buy, drive, or own. We can make money paying our taxes. I've taught you this. We can make money by paying our debts, our expenses. Why can't we do the same thing with our vacations? Why not have a policy or a specific strategy for our vacations? Do you guys think that'd be more fun? So we still have to do the same thing. I always talk about the two pains in life. It's either the pain of regret or the pain of discipline. Guess what? You choose. Agency, ownership, radical ownership. That is what we teach. That's what I preach. We want radical ownership of the things. So you want to own that responsibility of saving, of having a game plan, of having a vision of where you're taking your family. Are you going on a Mediterranean cruise? Are you going skiing? Are you going to Canada? Maybe you're going to Whistler. Maybe it's Park City. Maybe it's Colorado. Maybe you're going someplace tropical, Aruba, or maybe a little bit more exotic. Maybe you're going to a rainforest, or maybe you're going to New Zealand and jumping off the H.J. Hackett Bridge, the first bridge that anyone bungee jumped off of. That's been doing that for years and years and years. I want to say 60, 70, 80 years, something like that. And no one's ever died. Maybe you want to go bungee jump. That scared me. I did it because it scared me. So we're going to do the same thing. To keep it simple, to go back, we're going to start saving. We're going to have our big vision. What do we want to do? Then we're going to start saving in our account. Then we're going to create our infinite banking policy. We're going to go through the application process. We're going to design something with a money mentor like myself who's going to design it for your vacation. If it's a $10,000 vacation or a $5,000 vacation or a $15,000 vacation, again, it's like the car example. It doesn't matter if it's a Ford Focus or a Ferrari because we're all at different places. But the whole thing is, how do we parents take back control of that money? How do we have the banks make less money with our money, but we make money with our money? Does that sound good? You guys want that? So then from there, we're going to set up the policy. We're going to fund it. We're going to make our premium deposit. Then we're going to take a loan out. We're going to take a loan out. And then we're going to enjoy our vacation. And we're going to make a plan to pay the loan back. And guess what? Would you all agree? Could I get some eyes if you guys agree? Do the wealthy, yes, actually, give me a yes or no. Do the wealthy have more choices? Do the wealthy have more choices than most of us? Yes. Yes, they do. So when you pay your loan back, when you're the honest banker, when you're not stealing the peas, as Nelson Nash would put it, you know, that's been our mentor. That is the guy that we have learned this principle from. I call him Uncle Nelson. But if he was here, you know, I'd give him a hug because he's changed my life forever with this one simple change. Where does the Sipple family surplus money go first? It goes in our policies. From our policies, it is growing in my left hand always, uninterrupted compounding interest, and I'm borrowing from the life insurance company to do the things, to take that vacation. So in this example, we have capital that we're holding on to. We're holding on to our capital. The money is doing two things at the same time. it is earning us that interest, and we're using the money at the same time. And again, whether we're going $5,000 vacation or $50,000 vacation, it just really matters, where are you financially today? And then you're going to build to maybe you're taking two $5,000 vacations, right? Let's intentionally set up multiple experiences, because it's about, like, the four freedoms I've heard are financial freedom, time freedom, relationship freedom, and freedom to give back. I would add there's the freedom of fun, the freedom of magic, right? More money and less time with more magic. And again, to go through how it works, I know I kind of went through this once with you guys already, but it's simple. We're having a big vision first. Where do you guys want to go? Pop it in the chat, write it down below. Where would you guys go if you could go anywhere in the world? And if New Zealand is on your bucket list, move it to the top. Move it to the top. It is unreal. It's unreal. So we got Cabo, Alaska. I love it. I love both of those places. Tahiti, some good surfing there, Frank. That's awesome. Take your son, take your family. There's all of these destinations. The world is huge. So why not have more fun? Why not have more enjoyment? Nothing's guaranteed. So we're going to have the vision first. Where do you want to go? Maybe you're making yourself a board and you're putting on by when. By when do you want to go to Niagara? By when do you want to go to Europe? By when do you want to go to Tahiti? By when? Put a date on it. 2025, 2026. The sooner the better. Make it intentional. Then you're going to start planning. How much is this going to cost? How much is this going to cost? And you'll look at your life and you'll say, okay, do we need all of these subscriptions to these different television programs? Do we need to binge watch all these new shows? Do we need to go out to dinner 3 times a week? You guys will start being intentional and disciplined with that big vision in mind. Then you're going to make those deposits into your segregated account. Then you're going to engineer a policy and you're going to start storing that money in your policy. Once you do that, you're going to have so much freedom. This is what we did. The example that I told you I would share was Park City last year. So this is how I did it personally. So I set up a policy on my youngest son. We have $10,000 annual going to it. I have most of it going towards the base because I want it to grow long term for his future, but it's got about $4,000 in cash value in the first year. So what I did is I booked our trip. I found someone that we had worked with in the past that could, schedule everything, get the Epic passes, get the accommodations. We wanted a kitchenette because we like to cook our own food on vacation. I know it sounds weird, but I feel gross when I eat out at restaurant food. And so we found the perfect place, got it all set up. I put it on a card, a credit card that gave us 2% back. I took my son Connor, I stood him next to me. I showed him how I took a policy loan out. I showed him how I paid the credit card back. And then I showed him how I paid the policy loan back. We went on vacation. Everything was already paid for other than the meals there. And it was magical. I wasn't stressed about anything. Everything was already paid for. I knew how, and it protected my family for the future. I know all $4,000 of that money is growing uninterrupted, compounding, earning me interest for the rest of my life. And Connor got to see at 10 years old, hey, Dad, where are we going on vacation with my bank next year? What an awesome question, right? What an awesome question to have your son ask you. And it's a journey. This is step by step a journey. So again, with the vacations, we want a vacation like a boss to bring it all the way back around, right? Which means, where do we want to go? Everyone here is different. Some of you want to go to Europe. Some of you go to the snow, to Alaska, other to Dubai, to really cool places. But it's, imagine waking up on a family vacation, fully present, knowing your cash value is growing, knowing that there's no stress about the financial impact. It's just peace of mind, right? It's the freedom that we want. And over the years, when you look back on that vacation, you say, wait, that vacation was different. Why? Why was it different? Because you put something secure that you're in control of. You took back control of your money, and then you use that to give your family fun and magic. And the fun doesn't stop there. We're talking about the intro. If we're thinking long term, yes, we went to Park City this year. What if we do 2 ski trips next year? Because that policy is going to grow in cash value, right? We can take more days. We can take multiple loans out. Instead of taking one trip, what if we take 2 ski trips in year 2 or year 3 or year 4? As the policy grows, you will have more you can use it for. And this could be one of many. If this works for your vacation, I don't know if you guys have heard this before, if this is new to you, that's awesome. But this works for everything. I was just thinking how many people I know are traveling right now, are scheduling their applications later, are doing things with their policies later, their process, because they're on vacation, because it's that time of year. Our kids are out of school for the most part, unless you're up in the Northeast, right? They got a couple more weeks. But for the most part, we're all out of school right now. So again, if you guys are ready to change how you vacation, it's time to have a specific policy, a specially engineered whole life policy with a mutually owned company, all important things that's designed for you. It's designed for you to take back control, that helps grow that future, that's protected against liens and judgment, that's giving you a guaranteed legacy as well. Like if you're skiing on vacation and you're doing what my son Connor's doing, going through the woods and getting super brave at his age, I'm like, whoa, dad's almost 50, but boy, like, I don't know if I'm going to do that. That sounds a little dangerous. So let's start by securing the future. Let's start with your vision. That's it. Homeschooling never stops, but you do need vacation, Linus. You do need time away from the little ones. So maybe at times the little ones aren't coming. Maybe it's a vacation just for you and your wife. Like, what does that look like? As Nelson Nash says, his fifth principle is what? It's rethink your thinking. And how do you do this? How do you take back control? It's by being your own banker through specially engineered whole life. That shows you how you can take back control, how the money that flows in and out of your life, you can enjoy these funds over and over again instead of giving up the opportunity cost, paying cash, or paying someone else interest, or just getting stressed and draining your bank account to zero and starting over. It's just a rat race. It's an endless circle. That's the definition of it. Instead, I want you to enjoy these funds repeatedly. I want you to have that peace of mind. I want you to give your family that moment. So if you guys are ready to make that shift, join us on this revolution of, vacationing like a boss, having fun and having that peace of mind and not stressing out and being kind of a wet blanket. Like I'm a wet blanket. Like you're not going to eat that giant ice cream. Now I don't care. Now I don't care. Like, yeah, get the giant ice cream. I'll pay through the policy and it'll keep growing. And we'll in the future, your stomach's going to hurt. You're going to eat the whole thing, but that's okay because I'm not stressed about it anymore. You see how much you can eat. So what questions do you guys have? How can I serve? Thank you for being here again. It was a short one this Thursday, but it's a fun one. So appreciate all of you being here. Let me know what questions you have in the chat. Pop them in. I'm sure you guys have some. Why whole life instead of indexed? That's an awesome question, LK. I just got that question on my last phone call. So we have a bunch of videos talking about why whole life instead of index. This is what I would ask you. Please answer in the chat too, because I know we're not having a face-to-face, but who do you want in control of your money? Do you want to be in control of your money, or do you want to give up control to somebody else? Who do you want to be in control of your money? Me, that's right. When you do indexed, there's multiple variables that you have no control over, okay? At least 3. One is the ceiling. That what they show in the illustration, by the way, looking at an index universal life illustration, it'll always look better than a whole life. Always. They're prettier, they're more colorful. It'll always look better. I'm saying this live. It'll always look better. They're super sexy, but they rarely, if ever, will actually perform that way. The ceiling that is there can change in the second year. They can pull that back down. So the insurance company's in control. That's the direct answer. They can also change how much that they're giving you, like what percentage. So those are 2 changes just within the policy that you don't have in a whole life. In a whole life, you are the owner in that mutually owned company. You're the decision maker. You're the one that decides how that money's used. In an indexed, they can change some of the things and how it performs. And it's also tied to the market. If you love being in the market, LK, or anyone else who's thinking that index is the way, that's cool. Just know that I'd rather have you build it through a foundation, just conservatively, build it through your whole life, and then take the money and put it into a stock you believe, versus tying the performance of your secure foundation to that. So that would be the direct answer. I want you in control of your money. So we do not do anything with indexed. I do not recommend you even use your dividends for indexed. Everything is really about you staying in control of your money, taking back control of that money. And we do that through specially engineered whole life. And it has to be a mutually owned dividend paying whole life company. So great question. Well, again, till next time, I will see all of you back here every Thursday for Founding Fathers Financial Freedom. Who knows what I'll bring next, especially engineered. It means that we engineer them so you have cash value. A regular old whole life where it's just protecting your life will eventually have cash value after years 5, 6, 7, somewhere in that range, okay? So it will perform over the long term and give you cash value, but it is not engineered that way. So if someone is an infinite banking practitioner and they understand this concept, they will engineer it so you can get what you want out of it. So you're able to use your policy for the purchasing of vacations, of cars, of paying off debts, of sending your kids to school, of anything that you could use that you're not just paying for out of your monthly check. That's not, we're not talking about you're paying utilities and things like that. Eventually, 10, 15 years down the road, that could make sense. But today, when you start, we want you to start with how are you going to use it in your life today? So hopefully that helps. I plan to be at the next one. No worries, Emmett. We will send this out. It'll be on my YouTube channel. So this one was how to vacation like a boss. Make that next one. I will have some exciting content, new stuff for you every week. So we'll talk about something different, something a little the same, but it'll all be this introduction. Sometimes we'll go a little deeper. We'll bring the gold. That's it. So have a blessed rest of your week. Thanks for being here. I appreciate each and every one of you. By the way, you're in the 5%. Most people aren't doing what you're doing. So congratulations. Invest in yourself. Keep learning. Keep reading. I'll see you next week. Be blessed. Thank you for lending me your most valuable resource, your time and your attention. I know that you are in the 5% being here today. We learned how to vacation like a boss. If you've enjoyed this content, make sure you hit the like button, subscribe if you're new, and smash that bell to get alerted for new content. I can show you new ways how to use the infinite banking concept to fund everything and keep all of the money in your family and create more wealth than you've imagined. Now that you've been here, you have a couple decisions to make. I want you to watch this next video to learn how to take back control of your money, to break free from the system that you've been groomed by, the banks, Wall Street, and the government, and really learn how you can take back control by taking action. I'll see you in the next video.